With the ever-rising rate of inflation in Zambia, as an investor in any investment, your question really is, what is the effect of inflation on my investment? Well, I received a question concerning the risk of investing in Zambian government bonds, particularly longer-term government bonds. And so today, I want us to look at, is investing in Zambian government bonds for the long term a bad thing, considering the inflation? That's what I'm going to look at today. I'm also going to look at one of the terms that is found in the prospectus under general conditions of the bond issue that you might not have paid particular attention to. So watch until the end of this video to find out what that is, because it might have an effect on your longer term bond investments, such as the 15-year or 7-year government bonds. So that's what I'm looking at in today's video. If you've subscribed to my channel already, a million thank yous to you for subscribing to my channel. If you haven't subscribed, today could be the day. Consider subscribing to my channel by clicking the subscribe button. It is down here. Click subscribe right now. Now, let's get started. So we know what government bonds are. When you lend money to the government, you're essentially investing in government bonds or government securities. And Zambia has got different types of bonds that you can invest in terms of the tenure. You can invest in 2-year, 3-year, 5 years, 7-year, 10-year, and 15-year government bonds. Now, inflation, you already know, because I've explained this in my previous video, is the persistent increase in the prices for goods and services. And this also affects interest rates that are set by the central government, which also affects the interest rates that commercial banks also extend to the borrowers that borrow from these commercial banks. But in terms of today's discussion, the increase in the inflation rate also affects the interest rates, because when inflation rate is increasing, the central government also increases the interest rates. This affects government bonds as well, because the bond that you bought today might have been bought at a lower interest rate compared to the bond that is issued maybe a few years later, when, as a result of inflation, the interest rates have gone up. Meaning that the value of your bond is going to be worth less than the existing bond, which is going to be issued at a higher interest rate. As a result, there might not be demand for your bond on the secondary market. For example, in Zambia, our secondary market is the Lusaka Securities Exchange. So obviously, if I'm a new buyer into a government bond, I would want to buy a bond that gives me a higher yield rate compared to one that was issued years ago at a lower interest rate, resulting in an overall lowered yield rate. So this is the risk that we are talking about when we look at inflation. And so the question is, should you invest in a longer term government bond, let's say 7, 10 or 15-year government bond, which will expose you to this risk where your overall return on your investment or your yield might not be as much as you had anticipated because of the change or increase, persistent increase in the inflation rate? Well, first of all, I always emphasize that whenever you are considering investment in any kind of investment, look at the risks that are embedded or that are part of this investment vehicle that you're trying to use. Inflation really cuts across many investment portfolios, but we're going to talk about a few that may not really be affected by inflation. So when you look at the risks that are included or embedded in an investment portfolio, assess your investment appetite. Assess your investment appetite. Is it an investment you'd like to invest in, considering the risk that you're exposing yourself to? So do a risk assessment. And once you've carried out a risk assessment, you then be able to choose investments that match your risk profile. For example, if you determine that investing in a 15-year government bond might erode the return on your investment, and it's not a risk that, appetizes you, it's not a risk that you'd want to take on, you definitely look at other investment portfolios. But the best strategy to manage risks that relate to inflation, particularly those for government bonds, is to diversify your investment. meaning that you should not just depend entirely on government bonds, but also consider investing in other investments like the stocks or also real estate. If I may talk about real estate a little bit more. Real estate is an investment where you spend money on property, maybe buy land, build some flats, put them on rent, or buy an already built house or property and then start making, it's also fixed income because you'll be getting rental income from that property. Property is one investment which is rarely affected by inflation adversely. In fact, property is affected by inflation in a good way because with the increasing prices of goods and services, all you need to do as a landlord is also to up your prices on your rental properties. And so when you're considering investing in government bonds, consider that investment as part of your investment portfolio. So it's just an element of your overall investment strategy. Have a little or some money invested in stocks, other money is invested in real estate, other money is invested even in starting a business if you have the time to manage the business. But this all comes down to you and your financial goals and how much money you have available. If you're starting to invest in government bonds, first of all, you don't need a lot of money. To buy property, you need a lot of money. So even though it's a good investment route, you need to look at how much initial capital investment you need to make when you're considering investment vehicles, which is why when we're talking about government bonds, it's a really good starting point for you because all you need is very little money to get started earning a fixed income. And also, you're going to be getting coupon incomes every 6 months. In addition to you getting the final face value amount of your investment at the end of or maturity of the bond. So when you look at investing in government bonds, you really need to look at the overall benefits of investing in the government bond. Investing in government bonds allows you to get biannual coupon incomes. It's more like buying property and you're going to be getting rentals every 6 months. And it's different because with property, you need a lot of money to build a flat and actually find tenants, and you need to actively manage your property. With the bonds, all you need to do is give it to the government and every 6 months expect a return depending on the tenure that you've invested in and the strategies that you've implemented. If you are creating a ladder of investments and you've got investments for every month, we expect you to be getting coupon interest incomes every month. That is almost like owning property. And after a few years, you can actually sell your investment in this government bond in the secondary market to another person who would want to buy that investment. And the best way to do this is to contact your financial institution, your bank. They normally know investors that would want to buy Zambian government bonds. At the moment, our LUSA is not really that advanced in terms of the bond market. So go back to your commercial bank and find out, how they can help you offload that investment if you find that it's really risky and inflation is eating into your overall calculated return on your investment. Which, thinking about it, could actually be an advantage of asking a bank to do the bond investment for you. Remember, I always advocate for you taking control of your investments and actually submitting the application for the bond to Bank of Zambia yourself. But now thinking about this, probably there's an advantage of using a commercial bank because when you want to offload your investment into the secondary market, you simply go back to your financials and ask them to find an investor who would love to buy your investment in that government bond. Okay, so my emphasis really is spread your risk by diversifying your investment portfolio or your investments. Don't just focus on the government bonds, which is why this YouTube platform does not just talk about government bonds. I've spoken about all kinds of investment vehicles. I started by talking about starting a business, which for me is the biggest source of revenue for me that I eventually divert to other investments. So for me, it's business, it's the stock market as well. You can also consider stocks that are doing really well. Again, for Zambia, stock market is a little bit dicey. We will get into some details in future videos. Hopefully in 2024, I'm going to do a lot more, even as I tip my toes into the LUSE and how, buy a few shares, particularly for my learning purposes. And so That is what I would say. It's not a bad thing, especially if you're just starting out. It's actually a good thing because you can invest small amounts, 15,000 kwacha, and every 6 months you'll be earning income. And if you've built a ladder, you can actually be making money every month from the government bonds. And where you are even reinvesting the coupon interest incomes rather than chewing them, rather than eating them, but you are reinvesting them back into other bond investments, you can also really enjoy compounding interest on top of the return from the coupon incomes that you're making. You compound your interest by reinvesting the coupon incomes back into the bond market. That is really the strategy that you need to be looking at. Now, let me draw your attention to a clause which is found on Section D of the prospectus for the Zambian Government Bond. So when you are looking at maybe last month's prospectus or even this month's prospectus, we're in October, for the government bonds for Zambia, look at Section D, General Conditions of Issue. It says, the government of the Republic of Zambia reserves the right to redeem the 7, 10, and 15-year bond before maturity. This call option may be exercised after the bond has run 60% of its life. The Bank of Zambia will not discount any bonds issued. These are very important clauses that are found in the prospectus for the bond that I would want us to discuss today and also want to hear your views. So essentially, this is a call option. What the government of Zambia is saying is that they have the right to pay you back your face value amount immediately they call this bond back. So when they call the bond back, it means that they want to repay you your face value amount that you had invested, and probably even the last coupon interest that is due for that period, and that's it. That is what the call option means. The rediscounting simply means that you, as the investor, cannot go back to the Bank of Zambia and tell them, I want my money back, give me my money back, or I'm selling back this bond to you, so give me my money back and my face value amount. So the rediscounting is not allowed. Bank of Zambia will not rediscount the bonds issued to you. So what does this mean? So essentially, when the government uses the call option where they call back this bond, which by the way should have saved at least 60% of its life, and these are just on the 7-year, 10-year, and 15-year bonds, which means that for a 7-year bond, it should have saved at least 4 years. For a 15-year bond, it should have saved at least 9 years. So when they utilize this option of calling back these bonds, they will pay you your face value amount. But what they are trying to do is protect themselves from risk, the risk that we've been talking about. So in situations where interest rates are going down, it means that your bond is very valuable and might be expensive for the government to repay back. So rather than continue holding on to a very expensive bond, they would rather pay you back right now and reissue a similar bond tenure at a lower interest rate because of the prevailing low interest rate at that time. That is when the government will call back the bond. So they are also taking risk measures into account even as they issue out these bonds. Even for you as an investor, that is something to look out for. So if you are an investor in a Zambian government bond, be aware that when you invest in longer term government bonds like the 7-year, 10-year, or 15-year bonds, you are also exposing yourself to a risk of government at any time, as long as it's past 60% of the life of the bond, calling it back. All right, so take that into account. It might actually be a good thing if you really think about it. If you're afraid of inflation, it might be a good thing, but then it's up to you to really do the maths and calculate your overall return. For me, I think if I'm investing in a 15-year bond and I've gotten coupon incomes for at least 9 years, I think overall I wouldn't mind. I would have already earned my return. So think about that as well, even as you consider longer term investments. And if you are really afraid of inflation, consider investing in shorter term tenure bonds, 2-year, 3-year bonds, maybe 5-year bonds, and also treasury bills, which are under 1 year or 365 days. So that is an option you can consider. With regards to rediscounting, you cannot go back to the government and say, here's your bond, give me back my money. That won't happen. Again, they're protecting themselves against risk. Well, this is all I had to share in today's video. I hope it provided insights, actionable insights that are going to help you even as you start filling in applications for government bonds, and how to select a tenure for an investment in terms of the bond, how to process risks that you're exposed to as you invest in government bonds. I've done a number of videos on risks in regards to different investment vehicles. You can watch this video right here that talks about interest rate risks when investing in government bonds. Is going to provide further information. Well, for those that have subscribed to my channel, a million thank yous for you for subscribing to my channel. Please share this video, like it, drop a comment, let me hear how it's going so far with you. We are close to the year end 2023. I'm going to do a recap of the entire year. Remember, at the beginning of the year, I spoke to you, I told you about my plans for 2023, and I think we've done quite well. I'm going to do a final recap video in December, and you're going to get updates in terms of my journey to financial freedom, investments that I've taken so far. Thank you so much for joining me, and if you've subscribed to my channel already, like I've said, a million thank yous to you. If you haven't subscribed, consider subscribing to my channel by clicking the subscribe button. It is up here. Click subscribe right now. Thank you so much, and see you next time.